Hey there, welcome back to Finance Fridays. I'm Lucas Bolahood with the Bolahood Group, and Coldwell Banker RMR Real Estate, joined by my lovely co-host who's back with us this week, Alexandra at RBC. Alex, how are things going this week for you?
Good. Well, it's all right. It could be better. There's a lot of mixed signals here in the news and in articles and podcasts and things we've been listening to, but I know we'll jump into that today.
Yeah, well, heck, it's the dead of summer here. We're recording August 16th and getting ready for back to school as we're in the back half of the summer holiday season. I'm sure folks are taking advantage of this nice weather, although mixed between rainy and sunny the last couple of weeks. Really humid, but obviously it's been a beauty last couple of weeks, and you've taken some time away as well. I have in my downtime, so. We're just getting ready to gear back up and get ready for the school to start in September.
I know
Should be a fun
September
time.
will be here before we
You
know it.
must be looking forward to it, I think.
Yeah, it gives me a little bit more structure, but we've been in and out of camps with the kids and stuff and enjoying, and I can just be like a couple weeks, then we'll be there.
Yeah, well, we've got our oldest starting school in September, so it's a big year for us, and he's pretty excited about it. So we're looking forward to that.
That's awesome.
Um,
Should we talk, speaking of September, should we talk about September 6th? Do you know what September 6th is?
I guess we do. Nobody's really anxiously or excited about September 6th to arrive, but what is the meaning of that date, Alex?
So September 6th will be Bank of Canada's next announcement. And as I mentioned before, we're getting a lot of this mixed signals. We're not sure. We're being told to be prepared for another interest rate hike, but I don't know if it will really happen. And I wanted to kind of explain why. I know that we know that inflation went up, right? That was the big kind of headlines yesterday with the data reviews, that from June we were down to 2.8, and I'll mention that the target is 2%. That's where we want inflation to be, right? 2%. So hearing 2.8 was a little more reassuring in June, and then July numbers come through and we saw an increase to 3.3. So everyone was sort of freaking out yesterday, day before. And a lot of data has been put out on that. But as I was digging, reading, listening, one of the things to take note of is like core inflation. And core inflation is still above target, but it has been easing. To give you an idea, in July it was 4.7, and in June it was 4.8. So Luke, I'll share with you the difference between core inflation and headline inflation, and then maybe that'll give you some insight and some hope that maybe Bank of Canada can just hold off and stay on the sidelines come September. So core inflation concerns all commodities, services, and goods in the economy, minus the volatile fuel and food prices. So if you were to take those out, that would give you that measure. Okay, the core inflation, and that's what's trended downwards. But headline inflation does include your food and fuel, and you were mentioning, like, you noticed at the pumps that it had gone up and it's so expensive, and of course those things we have to buy, and it
Yeah,
is
well,
part of.
heck, like I noticed it was like a blink of an eye. Gas was in the mid $1.50 range, and it's up over $1.70 this week.
Right.
And it's just wild. So as you talk about the core inflation versus the headline inflation, and sort of what that means when you remove those, as you say, volatile commodities,
Yeah.
it changes things a bit. But why would core inflation be in the fours when overall the headline inflation, like the more volatile stuff included, looks like it's a little bit lower at 3.3. What's the difference?
I don't have the exact data or information to say which one, why, which one's here, which one's there. But in the fact that it's trended downward month over month, and it has been all year, it's a good sign that the monetary policy is doing what it's supposed to do. Rates being where they are high will impact or have been impacting consumer spending. We've been resilient, consumers are resilient, but it hasn't impacted all households yet. If you're you're a homeowner, you're sitting at a nice low fixed rate, you haven't really had to adjust your budget. Okay, sure, for food and gas and a few things that you want to do. Yes, life is expensive, but that big mortgage payment, or maybe that small mortgage payment, hasn't turned into a big one yet. And so many people are running into that when they come up for renewal. is that, wow, my payments increased. I was at 2%. Now I'm at 6%. It's significant. And until that happens to the homeowner, they're trekking along as normal and sometimes spending as they normally do. But when that household cost of borrowing changes, then that's when they tighten up their wallet, right? So it is a lag. It's very important to know that it is a lag for homeowners across our country, and at month after month that's impacting more and more people because there are no other options when you come up for renewal. We're not seeing rates at 3%. You just can't get it. You know, whatever's on the rate sheet with lenders is what you're subject to. So and as we talked about in the past, we're seeing a lot of clients clean up the unsecured debt, so credit card balances, loans and lines of credit, secured or unsecured, because it can just help with cash flow. But I think the Bank of Canada has done what they need to do. I don't think they're going to increase in September. I'd like to challenge Luke's. We have little bets on
You
the side
have
here.
tended to be the optimistic one, and I've been a
I
little
am too
pessimistic
optimistic.
the last while.
It's like 10 increases and I'm wrong 9 times. No, but I like to say that they're going to hold off because it's, I think 1 month little blip of inflation going from that 2.8 to 3.3 is not that it's okay, but I think that they will just hold off in September.
Yeah. The one reason, or one of the reasons I'm somewhat pessimistic to
Mhm.
that approach or to that viewpoint
Okay.
is when you're comparing what happened in July this year to last year. Talking about market stats here, we haven't had a chance to do this yet, but the average sale price, dropped from June 3.8%. We're at $961,000 as an average price in Durham right now. Our inventory and sales also dropped, in terms of new listings compared to sales. But our months of inventory increased, right? So there's less people actively buying in the market right now, and there's been less inventory in a month-over-month basis. But when we compare that back to 2022, we're
Hmm.
actually up a considerable amount, right? The average price July last year was 901. There were 1,460 new listings compared to the 1,670 we had this past month here. There were 700 sales last June compared to 770 this June. So, demand is still there, but it's going to take a little bit longer for this downward pressure, as you say,
Yeah.
being a lagging indicator is interest rates.
Uh-huh.
It's going to take a while for that to actually hit the pocketbooks of those people who are making that move or making the purchase.
Right.
Their borrowing power is going to go down, and for those who are listing their home
It
right
will.
now, the ones that are willing to buy it aren't going to be able to afford what they potentially not going to be able to pay what the homeowner wants, and that's where we're seeing probably a quarter of our market right now canceling, relisting the price or relisting the home at a lower price, and
Okay.
prices are slowly going to start coming down, but it's going to take time.
Yeah.
So because even though we are still up a fair amount, I'm not going to do the math off the top of my head here, but at least close to 6% on a price point standpoint, compared to last year, and inflation's appeared to be going up from where we were in June. I start to think that they are going to actually increase
Increase.
those rates again,
Okay. Fair enough.
just because we've surpassed where we were last year, and we've had what 10 straight months or 10 straight announcements of increasing
Yeah.
rates before they decide to hold off in February this year.
Yeah.
So that gives me a little bit of pause, thinking that maybe they will increase rates more because consumers are still spending, and we know the Bank of Canada is doing this to try and discourage that from happening. So I wonder if that's what they're going to do. But then again, it is interesting. You point out the core inflation number is trending down when, I look at
Slowly. It's
when
sticky.
I pull up to the gas pump and I'm like,
Yeah, I
whoa, what
know.
just happened here?
But with core inflation
So
going down, again, it's not where it should be. But and it's slow. It's been referred to as sticky, sticky and slow.
it's
So
sticky.
it's so
That's a new one.
sticky. But I think we're headed in the right direction. And I just, me, I'm like, don't do it again, Bank of Canada. And we're
Well,
looking at one market. I know we analyze the numbers here in Durham, but we've got it's the whole country that it impacts, and there's larger scale stuff. But I don't know. I guess the warning here is be prepared for it to go. And what does that mean for clients? Most people are staying away from the variable rate option unless you have a real reason to have it. There's other terms, short, or even that 4 and 5 are becoming more popular because they're better discounts on those longer terms. And some people are,
Mhm.
you know what, we'll review it in a couple years. If rates come down, maybe we break our mortgage roll penalties in and drop our rate at that time. They're even, considering those options. So
Well, that's something we're going to have to talk about at a
sure.
future date because, like, banks know that the information out there is suggesting that rates are going to come back down into the fours or low fives
Mhm.
in 24 or 25.
Mhm.
So they're putting higher rates in the near term for those
I
maybe
know.
for those 1 or 2 year, 3 year products because they
People are
want to
still
try,
taking those shorter terms because they'd rather come up for renewal than in 4 or 5 years. So that is still popular. But then you got people going, no, I want the lower rate right now. We'll deal with it when it comes,
Yeah. Well, and you know what? Like we're not, from what I've been also, reading as well, is that like the default rate, people who are not being able to, or not able to pay their mortgage
Yeah.
is very, very low,
Yeah.
right? Across the country. So that's positive that people are still able to stay in their homes. The stress test has done its job,
Yeah. And the
right?
stress
Like when you
test
were
still
getting that three
applies.
percent rate at your well, yeah, of course it
Yeah.
does, but you're basically still taking the higher rate on that 5.25 or was it 5.25 or the contract plus
Yeah, you
two?
said plus 2%. So
So
most people were qualifying to carry the payment at 5.25, and that again, that did its job. And right now we're looking at qualifying rates and applications are around 8% if your rate is 6. So we're ensuring that, gosh, God forbid, but if rates went up that high, you'd still wouldn't, it would be affordable for you. Um, and yeah, it's
well,
doing
there
its
were
job.
there were suggestions out there that they should change the formula for the qualifying rate or and whatnot, but really it
It
has
needs to
done what it
be
was
there.
intended to do when they put it in place. So shouldn't necessarily make those changes.
My
Be, you
suggestion
know,
with this, with being like rates where they are, is get rid of your debts, other debts if you can. If you're really looking for home ownership and you've got to be diligent with paying down the higher interest stuff because you're gonna be paying for it in the mortgage, right? To get into ownership, it's expensive. The prices are high and rates are high. So get rid of your student loans, lines of credit. Be modest when you're taking on a car loan and things for qualifying purposes. Um, be diligent with paying that down and your saving so that you can get into the long-term goal of investing in real estate.
And so one of the things I wanted to touch on here as well is, just because we've started to see inventory rising as there's fewer buyers in the market and the market's moving a little bit slower than it was 3, 4 months ago. So, you're talking about inventory getting into more of a balanced market. We're getting into
Yeah.
that 3 months of inventory, 2 to 3 months of inventory range. Anything over that, approaching 4 months of inventory is more like a buyer's market. So a
Mhm.
little more balanced, right? And buyers, they're seeing more conditional sales take place and things
Yeah.
like that. So, we know demand is still going to be strong, excuse me, in Durham region for
Hmm.
homes. We know there's more people coming into the country and we're going to need homes. We know the rental market is really hostile. So those who are in the market to buy are pretty serious about doing so. So I just want to touch on a little bit here about some of the benefits of listing your home in the fall,
Right.
considering
Good.
the time of year we're getting into here.
Good.
So, one of the things is, just to kick this off would be things like easier maintenance and curb appeal, right? We're going to have all the changing colors throughout we're already starting to see it. I don't know if you are. I've noticed a bunch of trees in my
Love that.
neighborhood starting to change from green to red. So we're going to start to see some, more vibrant color in there, which might enhance the curb appeal a little bit and some easier maintenance as well. Because again, the grass is going to stop growing at some point here with the cooler weather and you're going to get to enjoy some more of that or some easier maintenance around your home with gardens and things like that kind of
True.
dying off for the season, right? But so that's one of the benefits to, in terms of having to maintain the property, but still getting some of that nice curb appeal with the fall season. As I was just saying, you're going to have some more serious buyers in play as well because of where we are both with rates and things like job changes coming into play. Their employers are setting up for 2024. Maybe people are relocating or changing jobs and things like that. So, there may be a little bit more serious about trying to get a property or secure home before the end of the calendar year that you're in. Um, you're also going to have those buyers who sold their home in the summer that are now need to buy before their home closes. So before the one that they just
Yep.
sold closes, and
Mhm.
they're still really active in the market. So you're going to see a lot of those buyers in September really kick their search in gear,
Right.
in high gear. That's another one. But let me just see here what else I wanted to touch on that we haven't already. I think, with the fall season, you're going to get a chance to showcase some of the different features in the home that are, more related to, let's say, your cozy fireplace, staging the home and those sort of things, or those three-season rooms where you can have that nice, you get some really nice photography out of in the fall as well, things like that. But th those are some of the quick benefits of getting your home sold. A lot to do with where buyers are at in their whole process and their journey, and some of the day-to-day things that can selling in the summer or the spring make it a little bit more of a painful process. So
Luke,
less tire kickers this time of year.
Luke, turn on the pumpkin spice latte candle and you'll get a smell.
That's right, right. So like, I mean, I'm a big fireplace guy. So, like I love wood burning, so that's for me. It's like, oh, that's perfect, right?
Sure.
So we can get some nice, it's just different season. You can get a little different feel and look to the home and that kind of thing. And for those maybe are listening closer to the holidays, you do have that kind of decorating season in play. Like you
And it
said,
gets people
Thanksgiving's coming.
in
You're gonna get all that kind of stuff.
for sure. And if you're shopping in September, your closing's going to be likely October, November, and you're into your new home before the holidays. I know that seems like it's really far away because we're wrapping up like that summer season of August, but it's really not when you look at like flipping the page on a couple of months, and then you'd be in and you'd settle, and next thing you know, you're hosting. Go out and find
Well,
a
it's
beautiful
it's
dream home.
6 weeks till Thanksgiving, right? Like Turkey Day's coming and probably but yeah, 6 weeks or so, early October. And yeah, and then yeah, the Christmas holidays, and that'll be right around the corner as well. The snow's gonna fly before you know it. And yeah, and that's the thing, right? You're gonna have buyers that want to get in, that want a quick close, and maybe more willing to work with the terms that you want as a seller as well. So there
Yep,
are some definite benefits here, and we can help people navigate all that kind of stuff when the time comes.
absolutely.
But is there anything else we needed to cover off today? I mean, inflation is a painful topic, but we know the market's still really strong in Durham, although it is changing with some of this downward pressure from those darn interest rates. But what else do we need to cover here?
Well, I think our next recording would be close to that September 6th mark, and then we can see what happens.
Sounds like a plan. Well, folks, thanks so much for taking the time to be with us today and get a little insight into what's been going on in the real estate and finance industry here in Durham Region. And we're here to help with any questions you may have as it relates to those topics as well. So, again, thanks, Alex, so much for joining me
Thank you.
today.
Thanks for having me, Luke.
And you can catch all of our contact information at the end of this video here. Feel free to like, subscribe, all that good stuff. And we'll be with you again soon. Thanks for watching. Bye for now.
Bye.